A very warm welcome to this corporate case study on strategic approaches to geopolitical risk. I'm Charlotte Morgan. I'm Vice Chair of the ACT and also Non-Executive Director at Sumitomo Mitsui Bank in London. When I was getting on the train from Manchester at the end of our May 2019 conference, I could never have imagined that this year's conference was going to be done on an online platform with delegates all over the world connecting from iPads and laptops in their kitchens and sitting rooms. If you'd told me that, I would have thought this was a sci-fi drama that I might enjoy on TV. But it has actually happened. This pandemic has descended remarkably quickly on all of us around the world, and business has responded with extraordinary inventiveness. We're going to discuss that and other geopolitical risks in this panel, where I'm joined by three corporate treasurers who also lead businesses in a very diverse range of industries, and both where they work now and where they've worked before, cover private equity, digital services, outsourcing, property, mining, energy, and manufacturing. I'll invite them to introduce themselves in a moment, but just to tell you the structure of the session, we will talk first about how actions of governments affect businesses globally, focusing on the current trade wars and on disputes between governments such as Brexit. We'll then move on to talk about how the physical world affects us, focusing on climate change and also the pandemic. But before we talk about managing geopolitical risks, I'll invite the panelists to introduce themselves, starting please with Atif Hafeez, and then Ian Chisholm, and then Andrew Koss. Atif.
Hi everyone, thank you Charlotte. My name is Atif Hafeez. Finance is my speciality, but business generalist as well. For the last 14 years, I've been operating in a global private equity ecosystem, which is focused on technology-driven outsourcing businesses here in the UK, US, and in the other countries of the world. In terms of my treasury journey specifically, as the group treasurer, I've had an opportunity to create a shared service center quite recently. And with the pandemic all around us and the results of it, that creation of shared service center has been quite beneficial, organizationally speaking, as well as the leadership across the treasury footprint. It has helped us interact with the outer world in a much better manner and better sense. And I'm really glad to be part of this panel and hope to add value as much as I can.
Thank you. Ian.
Thanks, Charlotte. Also delighted to be here. My name is Ian Chisholm. I'm currently Group Treasurer at the Grosvenor Group. Grosvenor is a privately owned international property group. Roughly half of the assets are UK based, but Grosvenor also has investments in Europe, in Asia, and in the Americas, so in the US and Canada. So an international property group, and we'll talk later, I'm sure, but there's been a very diverse range of responses to the pandemic across our portfolio. Prior to Grosvenor, I worked for BHP for 3 years, and prior to that, I worked with Shell for 26 years, mostly in finance and treasury roles. And I have been on the ACT Council for the past 7 years, culminating in being president during 2018, 2019. So look forward to speaking with all of you today.
Thank you. Andrew.
Hi, thanks, Charlotte. So my name is Andy Koss, and I'm the head of UK for Sembcorp, which is a global energy business, mostly focused in Asia, but it does have sizable UK operations. Prior to that, I was at Drax Group for 15 years. I left there as head of generation So I ran a portfolio of power plants across the UK, but I did start my career there in 2005 as treasurer. And I led the refinancing as part of Drax's IPO back in 2005, and did a number of roles, moving from treasury into corporate finance strategy, and then on to be chief exec of the generation business. So again, looking forward to the discussion today, and hopefully I can bring a range of perspectives to the debate.
Yes, I'm sure, Andrew. And actually, if I could ask you to sort of hold the microphone for the first slot in our discussion on global political risks, focusing on both trade wars internationally and on issues within Europe arising from Brexit.
No, of course, and happy to kick off the debate, Charlotte. So, I mean, clearly what we're facing, I mean, globally is a number of trade disputes going on. I think the world of globalization has changed a lot over the last few years, and I think it will be here for some time to come. I suppose one of the areas of that dispute and that debate at the moment is Brexit. And I wanted to just mention a couple of things in both my perspective as head of UK at Sembcorp, but also from my time at Drax. When I was at Drax, we had the referendum, and I suppose one of the very major impacts that we saw on our business was a material drop in sterling dollar exchange rate. So Drax buys most of its wood pellets from the US. Our annual fuel bill is about £1 billion a year, of which much of that is US denominated. And clearly what we saw is a major move in sterling as a result of the Brexit referendum outcome. And really that hasn't recovered. I mean, we were up at 145, 150 to the dollar. We are now down in the 125s, 130s. So a 15% depreciation is pretty sizable when you've got a £1 billion a year fuel bill. So we've definitely seen the impact of that. I think from a treasury perspective, was absolutely critical is being able to hedge ahead of time. So we took a very conservative approach and made sure we hedged forward 5 years. We made sure we were fully topped up ahead of the referendum, and we continued in my time at Drax to layer on hedges just to manage that risk and take a conservative approach just to protect what those fuel costs were. And I think hedging out 5 years served us in very good stead. What I'm now seeing at Sembcorp is, I suppose, the continuing fallout from that Brexit debate and whether or not we'll actually leave the EU. Well, we've left the EU, but whether we'll leave officially from the transition period with or without a deal. And this has a much broader impact on us as a business. We serve a number of customers on the Wilton Industrial Estate in Teesside. Supply chains move from Europe to the UK back and forth. And therefore, having tariff-free and a frictionless trade deal with Europe is absolutely critical to those businesses, and therefore is critical for us at Sembcorp in the utilities that we do provide to those businesses. So I think early resolution of that and understanding the nature of what the trade arrangements are going to be with Europe is going to be absolutely critical. And what it will do is hamper investment. I think until there is that certainty, and it just means for us and our customers on the site, it provides a period of uncertainty that we're just having to manage. I am sure that pressure is being brought to bear government to government level. So this is way above just a simple sort of corporate in terms of the impact that it's having. But it's something that we have to live with and manage very carefully. And clearly the investments that we make, our operating costs, the people that we employ, all of that will be directly impacted, and is on hold really until there is more clarity around that future trade arrangement. So absolutely, I mean, we it's a very strategic risk for us, and I think early clarity is only going to help us and drive forward future investment in the way that we want to run and shape our business.
Is that a risk that you feel you are able to manage, Andrew, in your business, or is it difficult because of the complexity of the risks?
I think at Drax, I mean, if I go back to sort of just one particular element being FX, you can manage it to a certain extent, but obviously, I mean, the FX markets, your ability to hedge as a corporate only go out so far. So we said we had been able to manage that risk sort of 5-6 years out. But clearly, if there is a long-term depreciation in sterling, then that's something that we will have to live with at a broader business level. So I think we could buy some protection. I think at Sembcorp, it is as I say, a more macro risk. It is harder for us to manage. Clearly, we can do things like looking at our cost base, managing our investments, and running, I suppose, as tight a ship as we can. But ultimately, we do need that clarity in order to shape the long-term business. So I think when it impacts your broader strategic position, it is a much harder risk to manage, and particularly from a treasury perspective.
Ian, I wonder if I could turn to you at this point to talk about trade wars, international relations, and Brexit and the way it affects your business.
Certainly. So I mentioned that Grosvenor is a very international business. So roughly 50% of the assets are outside of the UK. It's a very diversified business, and that's definitely the business model that we're adopted. So diversification geographically, but also diversification between the different sectors of real estate. So we have some residential property, some office property, some retail property, and some industrial property. So diversification is a really key strategic approach by Grosvenor. And I suppose for us, even though we are an international property group, we don't actually have a lot of cross-border trade. What we are more interested in is how the individual economies are behaving and the impact that has on the residential and commercial property markets. So perhaps from our perspective, these trade wars and Brexit are more, I guess, second order risks for us. So what impact that has on the economy and what impact that has therefore on people's appetite for commercial property and residential property. We do have some small impacts from Brexit in terms of supply chains, some construction materials coming from Europe, some European stuff, but those are relatively small. I think it's more about the big macro picture, and clearly, we will be looking at, our own assessments of how individual economies are behaving in our overall capital allocation, and that might mean that we, put more capital in certain countries, but there's a whole that's bigger than perhaps the trade war issue, if you will. That's a whole bunch of things, including, of course, the pandemic at the moment and how various economies have survived the pandemic, and now, I suppose, also government response, fiscal response, and monetary response to the pandemic in various countries. So it's an extremely complex picture at the moment. I think there's a lot of uncertainty in terms of how economies will recover over the short term. But I think, we still think that there, is a lot of investment opportunities in real estate over the medium to long term.
Thank you. Atif, I wonder if I could bring you in at this point to talk about private equity and outsourcing in this context.
Right. So the key themes actually are quite synonymous for all of us operating in various business sectors. One is the coronavirus and the effects of it. Um, it is, we all know now, and we've been living with it, that it is not just a health crisis, it's an economic crisis. And it has exposed us to the kinds and shapes of uncertainties that we have never seen before. When we focus on and study the services sector and performance of it since March of 2022, when the global effects of coronavirus have started to happen, we see that the services which are essential, um, they have performed quite well in terms of keeping the businesses or the revenue streams where they were, and then trying to lean up on the cost front as much as possible. But the services, non-essential services, as they were, they suffered a lot. And when you combine both the essential services and the non-essential services, then one of the risks that we have seen being talked about quite a lot now is credit risk. There is a very serious talk about credit risk insurance outside the UK, that if there are avenues available for the companies, large companies, medium to large companies, to hedge their risk of credit as much as possible, um, um, in order to just come up with some level of certainty in the discussion within the conference room and the boardroom both. And FX, as Andrew talked about, is very much a focus point at the moment because of US-China trade war having its translative effect on the USD per se, but at the same time, the Brexit and the macroeconomic measures in terms of coronavirus in UK and around Europe affecting GDP and EUR. So those are the FX risks, which are a constant point of discussion within the Treasury deck, if I may say so. Apart from that, I suppose um, uncertainty is the key theme, and the executive leaders within the Treasury and outside in the larger finance and the larger business executive leadership teams, they've started to look at uncertainty, in my experience, as not a problem but a challenge now. So they're trying to solutionize as much as they can. Um, the point being they control the controllables and try to live with what is unknowable and uncontrollable, and be prepared to deal with it when it comes. So that's the summary of my experience as of now as a treasurer and as a CFO.
Thank you. I was wondering if any of the panel has experience of balancing their relationships with, say, the US and China, who clearly take very opposing views on many topics, and it's hard to predict which one is going to come out best, given that they both have different perspectives on things like export licenses, and they also are coming out of the corona crisis in different phases. I was wondering, Andrew, whether, I mean, Sembcorp clearly is a business that operates a lot in Asia. Is this a sort of difficult balance for Asian businesses?
Yes, and I think what Semcor is very keen to do is find the right areas to invest in globally. And as you say, we do have a strong presence in Asia. But I think what most businesses would want to do is not to take any sides in any sort of trade disputes, because I think keeping options open is very important. So we do have lots of opportunities to expand our renewables portfolio in Southeast Asia. Particularly, we're looking at some opportunities in Vietnam at the moment. And obviously, China is looking at a broader Belt and Road initiative, which impacts a number of Asian countries. And I think what we're looking to do is say we're investing in infrastructure in these countries, but not to necessarily be drawn into supporting a Belt and Road initiative per se. We're looking at this as infrastructure investments with a good return that enable us to expand our portfolio. So I think staying outside that dispute is very important for us. One, nobody knows where, how, and when it will be resolved. But I think we don't want to close off any investment opportunities for us in the future.
Well, certainly speaking from the banking business, it's critical to international banks to be able to stay and continue to support customers in all countries. This is a world where business is global and very closely connected. And of course, we understand there will be differences of view amongst governments, but I think perhaps I'd like to hope that business provides a way for countries to continue to communicate with each other and trade in order to create more wealth for us all.
Yes.
So I think that's right, and I think, and certainly what I saw in previous roles in BHP and Shell is that although, as Andrew says, people want to make sure that they are keeping business opportunities open and not getting on the wrong side of governments, I think there is a role for business to say that, the benefits of trade and of reducing tariffs, and obviously what we have seen in the last, I suppose, 25, 30 years is a massive amount of globalization, and really that has been reversed in the last few years. So, and I think, we all recognize that there have been winners and losers from globalization, and that insufficient has been done in the developed economies and the Western economy to look after the losers from globalization, and hence that's why you've seen Trump being elected and Brexit happening and things like that, because people are feeling that globalization has not worked for them. So it is, I think, still incumbent on businesses to really articulate the benefits of of increased trade and lower tariffs, but acknowledging that there are trade-offs to be made here, and governments need to also act to make sure that the population is being looked after from various aspects.
On that theme, Ian, I wonder if I could invite you to move the discussion on to the question of climate change.
Just to chime in.
Please, Atif, yes. Sorry, Atif, please, it would be great to hear your comments at this point.
Yes, so to add to Andrew's and Ian's point, trade wars are right. So trade war in the long term is in no one's benefit, whether you talk about the countries or the companies. And the sentiment is quite strong across the globe, especially the countries that I remotely work in, that this war has to find its solution as soon as possible. That's point number one, which is quite strongly felt. And at the same time, the redefining approach of globalization that had started a few years ago, perhaps quite recently, is taking another shape now. There have been some winners like Vietnam, Andrew talked about, but those winnings are quite short term. If you look at the global trade cooperation and coordination at a larger scale. Our perspective and the private equity's perspective essentially is that it's in nobody's favor, of course, in the long term. At the same time, the investors, the serious investors in the companies, potential buyouts, for example, they continue to look for the opportunities at the country level rather than the global economic spectrum level.
Well, thank you. Could I suggest we move on to talk about our second topic, which is climate change and related issues affecting ESG ratings and ability to raise funds. I mean, certainly speaking from the banking perspective, we have been under a very strong direction from our regulators to take climate change into account in our strategic planning and our credit decisions, both looking at the transition risk as businesses transit to greener forms of energy, but also thinking about in a constructive way about how to build in the cost of carbon when we evaluate credits. And all of this thinking is at an extremely early stage, but it clearly is coming down the pike at us. And we're also seeing social issues having a big effect on companies. And you only have to look at RTZ's recent experiences in relation to the destruction of the Aboriginal rock dwellings, and to realise how deeply people feel about matters of that sort. And I wondered, Ian, with your experience of mining energy, if you'd like to start the discussion on climate change and also on the coronavirus and how it's affecting your businesses.
So, thank you, Charlotte. I think what we probably have seen over the last few years, I would say 2 to 3 years, I think has been a really massive increase in focus on ESG issues, and that's been really across all sectors. I think perhaps prior to that, the whole green bond, green loan thing was very much focused on the direct renewable sectors, direct kind of sectors which had a specific impact that everybody could see and identify. But I think there was an acknowledgement a few years ago that you can't just focus on renewable energy or on recycling water. You've got to look at all sectors of the economy and make sure that all sectors are actually moving in the right direction. And, I look at my old companies, Shell and BHP, and clearly they are in, both of them in industries which have got significant carbon footprints. But even my new company, Grosvenor, I've been there 18 months, construction and buildings have got a massive carbon footprint. The UK Green Building Council thinks that actually 40% of the carbon in the UK is in construction, or in buildings, in the built environment, either through construction or in the operation of buildings with energy usage, water usage as well. So, these are issues which affect all sectors. And I think we are seeing from a Treasury perspective the impact of what you're saying, Charlotte, that the lenders are very much more focused on this. So every company is looking at its own carbon footprint and what it can do about its emissions. Grosvenor is no different, and has within the last year issued its own targets of being net zero carbon by 2030 for its directly managed buildings. You've seen also, I think, recently BP make some really quite bold moves to move away from the existing oil and gas activities and move more towards renewable energy. And I think what COVID has done is really just accelerate all of these changes. I think it really has brought business leaders thinking forward to say, look, how can we actually use this crisis to build back better, to build back greener infrastructure, to greener energy systems, greener buildings. It's really, I think, striking everybody that this we've got to try and make this into an opportunity rather than just a problem, COVID, and then build from that. And we've seen that emissions dropped incredibly in the first few months of the COVID crisis, because obviously people weren't traveling, planes weren't flying, energy usage has gone down. But the question is really, how can we sustain these changes? And that will affect different sectors in different ways.
Yeah.
Thank you. Andrew, Drax obviously is an energy company and involved in green energy projects with the wood-based technologies. What comments do you have on climate change and also on coronavirus and any links between the two?
No, no, thank you, Charlotte. I think what's clear, and I agree with a lot of what Ian says. ESG is very much at the forefront now in many investors, lenders, and other stakeholders' minds, and much more so than it was just a few years ago. I think it's almost the first hurdle to get through in terms of whether an investor will actually look at a business now is, do they pass muster on ESG? And I think that's a really important consideration. Obviously, I've been working in the energy sector now for over 15 years. So from my perspective, it's been at the forefront of a lot of our minds. And I think for Drax, it was really an existential crisis. Drax was the largest carbon emitter in the UK. And we moved to it being the biggest decarbonisation project in Europe. And it wouldn't have survived had it not been for the fact that we decided to embrace renewable technology and convert to wood pellets. Very similarly at Sembcorp, moving away from fossil fuel generation into renewables globally is very much one of our strategic aims. And I think the energy sector has done a very good job, certainly utilities. If you look at the UK particularly, the power sector decarbonisation is sort of second to none. So it's absolutely should be our focus. And I think it's right that it's now a much higher priority for a lot of people. In terms of, I think, just to add to what Ian said, two points I would make. The first is, I think businesses start to have to look at their supply chains as well. I don't think it's just about reducing your own carbon footprint. I think you need to look at supply chains, but also the resilience of your supply chains. I think there's probably a lot of adaptation that businesses will have to go through. And there's a bit of a link to globalization as well, in terms of where are you sourcing from? What are the risks to your supply chain? As supply chains have got much more just in time with less redundancy in. What would happen if one of your major suppliers was hit with flooding, for example, or fire? I think a lot of businesses are discovering their supply chains are maybe not as robust as they thought. So there's that, as well as just the carbon footprint to think about. And then I think with a link to COVID, I think what's clear is COVID has I think alerted the world to the fact that we need a global response to a global crisis. And I think climate change is no different. And I think, as Ian said, we've seen emissions fall significantly, but I think it's really just underlined the scale of the challenge that we have in order to get to net zero over time. So what I'm encouraged by is that, clearly governments have spent a lot of money trying to hold up the economy on the back of the pandemic. It would be very easy for them to sort of push global climate change and solving climate change further down the line. But what we're seeing is actually strong commitments to tackle global warming. So, for example, the French government, in some of the loans that they gave business, they tied them to green initiatives. We've seen that in France and other countries. And also here in the UK, there seems to be that ongoing commitment to net zero targets. And we've heard a number of speeches from government ministers that still seem to say that commitment holds. And hopefully we're going to see some commitments to carbon capture and storage, which will be very important for the Sembcorp business in the UK, maybe a hydrogen economy, and continued support for renewables. So I'm very encouraged by that. But I do think it has underlined the scale of the challenge we face.
Yes, and also those all-important Scope 3 emissions that we'll probably be expected to measure, including for the TCFD disclosures, which are coming at us very fast. Atif, I know time is running a little bit short, but it'd be wonderful if you could complete the session by talking about climate change, but also I think particularly the pandemic and the effects of the pandemic from an investor point of view. How private equity houses have responded to the changes in interest rates and indeed the changes in risk, which certainly in the banking sector we've had to revisit a lot of our modelling since February, and I imagine that that's probably the same for private equity.
That is true. That is true. About the global warming, we've already started to see the effects of it globally and domestically. If you talk about the individual countries and the greener initiatives all across the globe, I suppose, have gained momentum due to COVID-19. You might not be able to form a direct correlation between the two. But of course, the discussion around ESG has become much more stronger and much more serious in the boardrooms. And it was meant to be. ESG was taken up until a few years ago. It was taken quite casually as a just another ranking measure to look at the investment from an investor's point of view. But ever since the board of directors have started to take it quite seriously and treat it as a very material and qualitative yardstick of a potentially viable investment, the management have also started to look at it from a supply chain and value chain point of view. That has had quite a remarkable impact, especially by the global organization, the emphasis by the global organizations like World Bank, the IFC. They're quite serious about it. They talk about it. They keep improving and upgrading their directives as to how to look at ESG vis-a-vis the direct impact of global warming and climate change. Greener bonds, issuance of those has gained momentum. We all know that in Europe and outside. That is bound to have a very positive and very changing impact on how we conduct ourselves around the climate. So the focus on natural capital from the financial capital is shifting quite positively. Long way to go. Long way to go still, but positive conversations in the positive direction. Now, coming to the private equity sector per se, the effect of coronavirus pandemic. We all know that coronavirus has affected a lot of businesses in many ways, and the general mentality of private equity operators from a buy side and the seller side, buy side more, is to take this developing situation as a very good opportunity to spot financially viable candidates in the market to buy. Interest rate scenario is not going to change drastically in the coming quarters, which is provided amongst all the uncertainty that we have. It has provided some level of certainty to the private equity operators from a buy side point of view that, okay, if we keep the interest rates sort of a done deal, not but to a certain extent, we now have a negotiation power to take effect of coronavirus impact on the global economy and thereby on the companies into the price points that they discuss with the companies when they intend to buy them. So vibrance in the overall private equity ecosystem has been seen and noticed. And then the collaboration of private equity with the banks who have heavy lending appetite has produced some very positive results in and outside UK. When the pandemic started, somewhere around March and April, private equity market as a whole, from a buy side point of view, was rather slow. They were heavy on the sell side, of course, understandably. Now again, the balance has shifted from the sell side to the buy side. If there is a genuine sell, they'll still sell it, but they are on the lookout for rightly priced or fairly priced investment opportunities in and outside UK?
Well, that's a very interesting to note to end on. According to whether in your business you regard private equity as a threat or an opportunity, they're clearly looking for ways to invest, and it's another topic that corporate treasurers need to be alert to over the coming few months. I'd like to thank my three panelists very much indeed for these extraordinary insights really into such a very wide range of businesses. I certainly learned a lot today, and I'm sure other delegates will have done as well. And I'd like then to hand back to the conference organisers and to thank the ACT for giving us this opportunity to speak today.